Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about one black crow candlestick pattern, a reliable bearish reversal signal that appears at market tops. This pattern helps you identify potential trend changes, giving you a strategic advantage in timing your entries and exits. Whether you are trading the forex market, the stocks, or cryptocurrencies, understanding this formation will enhance your technical analysis skills. So let's see how we can break down this strategy so that we can capitalize on it on the chart whenever we see it. The one black crow pattern emerges during an uptrend and consists of two key candlesticks that signals a potential market reversal. The first candle appears to be a large bullish candlestick, showing buyers are in control with a strong close near its high. Now this is the strong close near its high on the strong bullish candle. This represents the final push of an uptrend. Then the second candle opens near the high of the first candle but closes significantly lower, creating a bearish candle that penetrates deep into the territory of the first candle. The bearish pressure indicates that sellers have taken control of the market, and this is the bearish candle that we're talking about. For a valid one black crown pattern, you need to verify three essential criteria. The first criteria is to ensure the market is in an uptrend. The second one is the initial bullish candle must show significant size compared to the recent price action, while the third signal is the bearish candle must close below the midpoint of the first candle. Now as you can see, if this is the midpoint of the first candle, the second candle must close within the midpoint, must close below half of the first candle. This is the meaning of that. The psychology behind this pattern reveals how market sentiment shifts from optimistic to doubt. When the second candle forms, it demonstrates that sellers have overwhelmed buyers, often leading to broader trend reversal. This is basically what the market is all about. Now that we understand the pattern structure, let's examine and implement this knowledge in our trading strategy. Now, how do we trade using this one black crow pattern? It requires a systematic approach to maximize your success rates. Your first step is to identify the pattern during an established uptrend, and as we can see from my chart here, this is an established uptrend because the market was making a series of higher highs, a low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and a high, confirming that we are in a bullish trend. As we can see, we have confirmed that our first step is to identify the pattern is in a bullish trend. So as we have confirmed that we are in a bullish trend, I can even draw my trend line to further confirm that yes, our market is in a bullish trend. All right, we have to wait for the bearish candle to close below the midpoint of the first candle. Now as we can see from this area I marked on my chart, we see a strong bullish candle and we see a bearish candle closing below the midpoint of the first candle. If I can draw my tool to find out the midpoint of this first candle, and we can see the midpoint is this green line over here, showing that this red candle closed below the midpoint. Remember, this is an important criteria for this strategy to work. We have to enter after we see price close below the second candle. We place our stop loss just above the high of the bullish candle. Place it above the high of the last candle. This placement protects your position while giving your trade enough room to breathe. Remember, for position sizing, risk no more than 1% of your trading capital on each trade. Now that we have set our stop loss, the next we need to set is our take profit. You set your take profit target at a previous support area, and as we can see in this area of the market, this is a previous support area. Taking our take profit to that area will be a good zone to exit the market. You can split your position into two parts, closing 50% at the first support level and allow the remaining run to the next support level. We can decide when we want to take this trade. We take this trade at and target the first support level as our first take profit. Then we can target the second support level as our next take profit area. This is how we can exit the market to capitalize on every move on this strategy. This approach helps you to secure profits while letting winners run. Strengthening your trade signal by adding our volume indicator. You can strengthen your trade signal by adding volume analysis or a momentum indicator. This helps us to know if there is bearish concentration or bearish pressure in the market. And as we can see from this area where we took our trade, there was a strong momentum to the downside, and as we can see, shows on our volume indicator at this area. We can also use our RSI to confirm this strategy. Our RSI will show us the strength of the trend. It can show us if we are in an overbought or an oversold area, and as we can see, our RSI just left the overbought zone, showing that we are trending to the downside. It is leaving the 60 region, pulling down, showing that we are going into a strong bearish trend. Remember to avoid trading this pattern during major news events. When you know that there is a major news event coming up, you need to avoid the market at all costs, because during a news event, the market creates a level of uncertainty. It becomes unpredictable. So we have to wait for a clean and clear setup before forcing trades. Alright, let's look at some common mistakes we need to avoid when taking this pattern. Trading the one black crow pattern successfully requires avoiding several critical mistakes that can impact your trading decision. The first major error traders make is waiting for the pattern to fully complete. Is not waiting for the pattern to fully complete, sorry. You must see both candles close before taking action on your trade. So you must see the pattern close before taking action on your trade. Now, if we can look at this part I marked out on my chart, we can see the pattern was about forming during this uptrend. We saw that market was trending to the upside in this area. We saw our strong bullish candle, and we saw our bearish candle that closed below the midway point of the first candle. But if we did not wait for this pattern to complete, or confirming other criteria like being in a sustained bullish trend, we would notice that we would end up taking a loss in this trade. So we need to make sure our strategy shows during a strong bullish market. It has to be trending to the upside before you can spot this one black crow candlestick pattern. This is the first mistake We have to always wait for the pattern to be completed first before taking the trade. Now the second crucial mistake is another mistake is trading this pattern in isolation. You need additional confirmation from volume and market structure before you take this pattern. We have to look for increasing trading volume on the bearish candle to validate our reversal. So before we take this trade, we need to see increasing volume on our volume indicator before we take this trade. As we can see in this area, we can see increasing volume, signifying that there is going to be a strong reversal at this area of our chart. This pattern works best at a resistance level after a strong uptrend. After a strong uptrend, it should work very best in a resistance level. And if I mark out my resistance on this chart, we can see market reacted from this area in price. You can see the way market reacted from this resistance level. This is an area where market came, it broke through it, it was reacting. We can even mark it this way as the case may be. You can see that this pattern worked during when price got to the resistance area, it broke it and broke back into the resistance area. It works best when trading on a after trading on a resistance level during an uptrend. Trading it in a sideways market or without considering market context leads to poor results. So we must trade it when we confirm the market structure. We should avoid trading this during a sideways moving market. This may lead to poor results. We have to wait for clear uptrends before looking to take this pattern. As we can see, we wait for a pure uptrend before taking this pattern. We can look at other examples. We can see before we took this pattern in this area, the market was in a clear uptrend. To validate the setup, it has to be taken in a clear uptrend before you decide to enter this trade. Remember that no single pattern guarantees success. Let's not forget that no single trading pattern guarantees success in the forex market. The one black crow should be part of a complete trading strategy that includes proper risk management and multiple confirmation factors. This strategy must come with a complete proper risk management. In fact, any strategy you are trading must be backed up with a proper risk management. If not, you are going to the market to burn your money and you wouldn't last long in the forex game. Not only that, you have to wait for multiple confirmations using your volume indicator. You can use your RSI tool you can also use your moving average to be sure that you are entering this confirmed one black crow candlestick pattern. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.